Welcome to the Journal podcast from the Chartered Insurance Institute, a place for thought-provoking discussion from the world of insurance and beyond. I'm Michael Bond, Social Media and Production Executive at the Chartered Insurance Institute. Today, I'm delighted to be joined by Nick Oswald, Space Client Associate at Elseco, a leading specialist in underwriting high-technology risks across space, aviation and energy. Today, we'll be discussing space insurance. We'll be talking about what it is, who might potentially take out this type of insurance, what the potential risks are, as well as applying it to real-world situations. We'll also look at potential claims, we'll look at future emerging risks, and we'll also talk about what the future holds for space insurance. Nick, thanks for joining me on the podcast today.
Thank you for inviting me, Michael. It's a pleasure to be here.
You're very welcome. So to begin with, can you just talk about yourself and what Elseco does?
Sure. So my name's Nick Oswald. As you mentioned, I'm a client advocate with Elseco. I joined the company at the start of last year, but I've been kind of involved with space insurance on and off for, probably the best part of 20 years now, with a few jumps in between to the world of consulting, and also had a stint at a small SAP manufacturer based in the UK. Before coming back to wide and interesting field as space insurance. So Elseco itself is a specialty MGA, which was founded 20 years ago by our founder and current CEO, Lauren Lemaire. We're headquartered in Dubai in the Middle East. The thought behind that, so I suppose at the time the company was set up, the founders were looking to see, what else was out there beyond the space solutions that were on offer at the time. So I suppose Elseco was born from asking the question, what else is out there? Originally, when the company was founded, Elseco focused on space insurance. But then since then, as you mentioned, we've branched out into other sectors. So primarily aviation, which followed about 5 years later, then latterly into energy markets. So I'm actually part of Elseco in London via our Lloyd's syndicate, through which we also write other lines of business such as A&H and some marine insurance as well.
Fantastic. Really great introduction there. So for listeners who might not be aware or might not understand, what is space insurance in a nutshell?
So space insurance, it's primarily concerned with insurance of satellites as the primary asset that's under consideration. Occasionally, there's tends to be a couple of different phases in the life, or a few different phases in the life of the satellite, but the space market is primarily concerned with the actual launch of the satellite via space rocket. Occasionally, the rocket itself can be the object of insurance, but primarily it tends to be satellite-focused cover, because although space technology has come a long way in the past sort of 60, 70 years, essentially it's still a risky business. You're still putting what potentially a very high-valued asset. Some of them range up to around about $500 million level on a sort of big firework, essentially, is my very loose analogy. Obviously, the technology is a lot better than that these days, but it's still a phase of the life of the satellite, which the bigger, more expensive satellites can last for up to sort of 15, 20 years in orbit. So you kind of need to have a reliable way of getting it into orbit. The other side of that is then once the satellite reaches orbit, typically you're looking at the first year in orbit of the satellite as a slightly distinct phase, in that tends to carry a greater risk compared with the rest of the satellite, because effectively, you can test it as much as you want on the ground. Once it gets on orbit and you start switching things on, if there's any flaws with the design, any bugs in the manufacture, those will become apparent typically within that first year period. So that tends to attract a higher premium rate as a result. And then essentially, space insurance covers the life of this asset through to the end of its effective service life, when it's hopefully deorbited in a responsible fashion. But sometimes things do go wrong, or or satellites can't be quite manoeuvred to an ideal location to sort of see out their days, as it were.
Absolutely. That sounds absolutely fascinating. And yeah, there's not too much, I suppose, you can do when it's up in space. It's not like a car where you can have a mechanic go and service it. It's far more complex than that. And I'm sure we'll come on to touch on more about that. And you have already touched on it, I suppose, a little bit here, but what makes it such a specialized area of insurance?
Well, as you say, it's that age-old problem of once the satellite's in orbit, there's little you can do to really correct any issues with it. I mean, there are some in-orbit servicing initiatives currently at play, but that's primarily targeted towards extending the life of the spacecraft at present. Although it's possible in the future that may branch out further. So I suppose it's the level of difficulty comes in. Because when you're designing an asset that's unlike like say an aeroplane or a power plant, you can't regularly service it other than software patches uploaded to the satellite. So basically, you need to build this thing to last. Some satellites do have a shorter lifetime. Having said that, but even then, it's still your goal is still to design the satellite and build the satellite so it lasts through to the end of what's known as the design life of the satellite. So I suppose the degree of complexity comes in as an underwriter when you're carrying out a risk assessment on a risk that's brought to you. You're kind of looking to see, does this satellite or rocket, does it have the reliability? Does it have the hallmarks of being built to last? Can I spot any potential design issues with it or flaws or aspects they may not have thought of the designers when they were producing the spacecraft, or it's operating in a slightly unusual environment. So I suppose in that sense, it kind of goes hand in hand with a highly technical, analytical approach. A lot of my contemporaries in the market on the underwriting side and sometimes on the broking side are by background satellite systems engineers. So they've built satellites with their own hands and put them together, and they kind of used to understanding some of the pitfalls and things that can go wrong with the satellite typically. Having said that, I think there's probably room for a more traditional insurance-based approach as well, certainly from other lines of business, as I think there's always a need for creative solutions to be developed for new and emerging technology.
Yeah, absolutely. And as I said, there are some overlaps clearly with other areas of insurance, but that's very complex, very dense topic that we're looking at as well. And there's so much technical knowledge that you have to have and expertise in this area for such an unknown quantity that is space, I suppose. And looking at potential coverage for space insurance, what areas and what risks does space insurance typically cover?
Yeah. So once the satellite's, I suppose, left your factory and it's on its way to the launch pad, I suppose there is a distinct phase before the launch itself, which pre-launch insurance, which is a slightly separate area, which is more related to the cargo market, I would say. But essentially, it's mostly all perils in the sense of any physical damage to the satellite that can affect during the launch phase. If it gets shaken and more strongly than it's been designed for, then that can cause issues. Sometimes the launches themselves do go wrong, so that's a clear sort of PD type issue. And then once it's actually in orbit and on station, you're covering against physical damage side of things. So it can be objects, natural or man-made, that are within the space environment that are colliding with the satellite potentially. It can be the space environment itself. The satellites are basically subjected to extreme levels of radiation, depending on the time of the solar cycle that's in effect. And also as well, any mechanical breakdown of systems, or as I say, design flaws that weren't apparent or corrected prior to launch that manifest once they're on orbit, is another area that's covered. You're also covering any errors in terms of software programming or coding for the systems that are required to make the satellite function. Also, typically there are general exclusions that come in for most policies, which covers things like cyber or acts of war. Again, it's an interesting area. As I say, it's as standard excluded from most policies. but there are considerations around buybacks and that area. You're also looking at, as I say, in terms of the physical damage side, there's been quite a build-up over the past sort of 60, 70 years of junk, basically, in various orbits in space. And it's very challenging, particularly for insurers, to understand the risk that's involved from some of these objects that are orbiting the Earth.
Absolutely. And even today, I read a statistic that since 2010, we must have had in the low thousands at best, maybe satellites in space. And now we've got, from what I read on the European Space Agency website, it's more than 15,000, if not more, in space at the moment, which is an incredible amount of space traffic, which seems a weird concept to talk about, really, but big traffic in space. But there's quite a lot of space debris that could potentially hit these satellites, and there's far more risks in that area, which sounds really quite complex. Looking at a couple of areas of those that you insure on those risks, launch phase and the in-orbit phase as well. Talk to me through those two and why those two areas are quite different, or if there's one area is riskier than the other and how you would view it as an underwriter.
I suppose starting with the launch phase, that's always historically been viewed as the most tricky phase of the mission. I mean, there's the old adage, it ain't rocket science, but in this case, although we've got a lot better at it, it's still a tricky area to get right, particularly if you're a new organisation that's coming into the marketplace that doesn't have historical track record of decades of experience designing, building, and launching rockets. At the same time, you've got highly combustible fuel that's on board some of these rockets, and accidents sometimes do happen. And in the actual launch phase itself, the satellite is being shaken to a large degree and has to, endure some extreme G forces, which all, puts a lot of stress and strain on the satellite. Because essentially, once it's in orbit and it's in that zero G environment, effectively the stresses of the launch phase have passed, and as long as the satellite's managed to endure those and survive those, that highly stressing phase of the launch, that tends to be a more stable period for the satellite, which is why you had the distinction between launch and sort of post separation, as it's known, once the satellite separates from the upper stage of the launch vehicle. But again, as I mentioned, the first year in orbit tends to be the time when any issues with the satellite from a design or a build perspective become apparent, or just simply turning on the system if it's something's gone wrong during the launch phase, or if the satellite has to deploy any external appendages such as a solar array or an antenna or something. That's again a stage when things can go wrong. In space, the general methodologies, you try and go for the least risky option where possible, particularly if it's a moving or mechanical part that's subject to wear out or problems with deploying correctly. And then I suppose after that first year, you would typically see the reliability profile for satellite. If you can imagine a bell curve type shape, so nearer the start, it's more of a risky period. But then once the satellite's been proven and tested on orbit, satellites tend to undergo a thorough checkout process, which can last for a few weeks up to a few months, to actually calibrate the systems, turn everything on, make sure everything's working as possible. Make sure the payload of the satellite, which is the primary aspect that the owner is concerned, or the insured is concerned, is functional and working as intended.
Fantastic. And it sounds like that launch phase then, and that first year is a really crucial moment, and one that potentially you have more levels of coverage for because the risk is so much higher. And in any other area, maybe talk about car insurance, there's probably a high volume of incidents that happen, but a low level of risk in terms of financial output from the insurer. Whereas in space, there may be maybe less levels of, or lower levels of risk, but when it does go wrong, it can go very, very wrong.
if there's some sort of catastrophic event, a satellite explodes or it underperforms and puts the satellite in a orbit that's not particularly useful, then it can be a big deal. Or, as I say, if there's a system on the satellite, such as an antenna, that needs to deploy for it to be able to function properly and perform to its required business case, then that's a major issue for a satellite operator.
Yeah, absolutely. I can imagine that being something where you'd think, oh, I need to take out some insurance to cover yourself for that potential risk. And coming on to the types of companies that might take this out or individuals, who would those be and what would they use it typically for?
Um, so organizations that typically insure satellites, or in some cases it can be the launch providers themselves. It tends to be more geared towards the commercial sector rather than kind of governmental or civil organizations. I suppose historically that's because let's say the American government have a high value imaging satellite. It could be military satellite. If something goes wrong with that and there's a problem with it, it's less of a problem that it's a financial impact. It's more that, say, troops on the ground in whatever theatre of combat they're in can't rely on those services now. So in that case, the relevant military department or civil department will turn around to the respective government and say, "Can you buy us a new satellite?" Effectively. So it tends to be more commercial entities, which can range in a sort of large regard in terms of their experience and track record with insurance. Historically, it's been large corporate entities that have operated satellites. It can be national telecommunications operator or whereas in recent times, the past sort of 10, 20 years, there's been I suppose it's a phenomenon that's known as the democratization of space, where it's become less the sort of playground of big of national entities or space agencies, and it's been more private industry that's coming into the marketplace. And in some cases, some quite small startups have come into the market with sort of new concepts and kind of wanting to get in on the action, as it were. One of the sort of biggest proponents of that would be SpaceX, which is owned by Elon Musk, who I'm sure your listeners would be familiar with. He, I suppose, effectively came into the marketplace around about 20 years ago and effectively changed the game in a way, in that he wanted to bring down the cost of launching satellites and objects into space, which, as you can imagine, is a high degree of cost in developing a rocket and then building the manufacture of the rocket and fueling it, etc. So you wanted to bring that sort of bar to entry down and enable more players to come into the marketplace with the encouragement of cheaper launch costs. So, as I say, it can range from big established entities to small startups who, in their case, I suppose it can be the first satellite they built or one of the early satellites they built. In their case, it can be a catastrophic outcome for the company if a satellite fails or fails to make it to orbit, because not just does it impact on the future business plan for the next 5 to 10 years, the loss of revenue they would get from not being able to operate that asset. It's also not having the ability to build up a track record of producing satellites that work in orbit and be able to say to future prospective customers, we have a great track record of building reliable spacecraft, so you should buy your satellites from us rather than one of our competitors.
Absolutely. And yeah, as you've already touched on there, it does feel like the market has very much changed from what you traditionally see as governments taking on space projects and looking after that with NASA and America, European Space Agency. They very much feel very linked to nations, linked to governments. Whereas now with, as you mentioned, SpaceX, Elon Musk, Blue Origin with Jeff Bezos' company as well, there's more private companies in the game now as well and investing in that way. And there seems like there's been a sort of change in the dynamics a little bit. And with some of those as well, I suppose with the larger government organizations, you may have found that they maybe don't take out insurance or they self-insure themselves, whereas maybe a smaller company would have less capital to be able to do that and may well seek insurance at the start. Is that something that you think is the case, or what would motivate someone to take out insurance or to self-insure themselves?
So yeah, it can vary considerably between private and public or civil entities. In terms of the public entities or the civil entities, as I mentioned, it's more they lose the benefit of having ability to operate whatever satellite, if it's a military satellite for use by the military, or if it's a imaging satellite to give them important agricultural data or whatever. That's more the primary concern than the financial impact. With some of the small actors or new entrants to the market, which it's been, I suppose, given the popular coinage is new space. As you mentioned, when the company's first entering the marketplace, often investors will insist on some level of protection for the startup. If there's an incident or there's a loss of a satellite, then the kind of impact on the business case hits them quite hard. That's quite an impact to the balance sheet. However, over time, as some of these newer entities begin to establish themselves and get more proficient at building satellites and things, sometimes the drive can be more towards building in levels of redundancy within, particularly if it's a constellation of satellites, the satellites that you're launching into space. So, for example, if you, again, I suppose using the SpaceX example, so they have a series of satellites that's known as Starlink. You can kind of access the broadband for those at home. Other providers are available, of course. So they build a constellation. Say they just picking a number which is not represented, but let's say you build a constellation of 100 satellites, but effectively you only need 90 of those satellites to be functional for you to deliver full service to your customers. Then essentially sometimes it can be preferable both from a cost saving perspective and also from a continuity of service perspective to already have spare satellites, if you like, in orbit and ready to go if there's a problem with one of the active ones. So in that sense, the motivation can be to I suppose save the money that you would pay in insurance premiums, and instead you invest that in additional redundancy and flexibility within your constellation. So that's I suppose that's the main motivations towards why an entity might want to self-insure. I suppose also with some of the sort of smaller players on the market, the newer entrants to the market who don't have that established level of reliability for their satellite platforms that underwriters would typically look for. They may be put off somewhat by the sort of higher levels of pricing that are put on some of those newer risks, if you like, that haven't been quite as well proven. So that can be another reason to kind of try and go it alone, as it were.
Yeah, absolutely. And it makes it really clear, obviously, for those bigger players who maybe have more capital behind them and can look at it and go, we can survive a satellite being taken down or a big financial hit. Whereas the newer players coming into the market, and as we're seeing, it's a growing area in private companies coming into this sector, I think it's really clear that they will need insurance to start, especially at certain phases in the launch phase when it's so risky and so high stakes that they can't afford to lose their satellite that's being launched into space. They can't afford for things to go wrong at that stage. So having that coverage is absolutely crucial. And if we apply some of this stuff to a real world scenario, the one that pops into my mind is Artemis 2, the first crewed mission to the moon in over 50 years, which is extraordinary to think about anyway. And if we sort of present this to yourself and Elseco, let's assume that NASA had come to you and said, Nick, we need some help with this to ensure various phases of the launch, whichever it might be. How would you go about it, and what would be the key factors in ensuring that particular type of risk?
Well, I suppose as space underwriters, we are constantly seeing new and complex and innovative types of risks that come along. In this case, something such as Artemis 2, which is effectively looking to slingshot around the moon in preparation for actual landing on the lunar surface for future missions. It's not an area that would have historically been insured by the space insurance community. It would present a bit of a unique challenge in and as of itself. First of all, in terms of assessing the risk, so I suppose starting with let's assume the all goes well and the satellite, the rocket launches into space successfully. In terms of human spaceflight, that's I suppose not quite a new area. In recent years, there's been a few companies who've been. You mentioned Blue Origin, that they've been quite prominent recently in terms of launching space tourists into space. It kind of goes back a few years as well. You've had very high net worth individuals who were lucky enough or fortunate enough to be able to I suppose invest on the trip of a lifetime into space. But it's not typically been an area that's been covered by the space market. Possibly in practice, a lot of these companies insist on waivers with these high net worth individuals because the liability aspects. Having said that, at Elseco, we have occasionally been approached with some aspects of it that do relate to astronaut training programs or whatever. So I suppose in our case, we'd be fortunate enough to try and sort of lean into expertise in other lines of business that we have within the company. As I mentioned, we have a A&H team that's based in London. So I'd probably be conferring with some of my colleagues that are more used to dealing with issues of sort of personal liability for human participants, should we say? And then in terms of the launch vehicle itself, you'd have to look at. Currently the one that's due to launch shortly would only be the second launch of the SLS, or capsually named Space Launch System. So without that track record to go on, you as an underwriter, you're having to look at alternative ways to try and price that risk and gain an understanding whether that's looking at similar capabilities of a similar level, which is somewhere on the par with a Saturn V, the most powerful rocket ever built to this point, or you're even looking at programs like the space shuttle program to try and assess that risk. I suppose the one of the other main challenge with this would be the actual sums insured that would likely be involved. So the SLS itself, the cost of developing it alone was in excess of 20 billion, and the Orion capsule, which is the crewed capsule that would be on the rocket, again is around about the 20 billion mark. So the sum insured per launch is probably somewhere in the region of sort of 2 to 4 billion, which currently the entire global space market does not have the capacity to be able to cover all that risk. Somewhere north of 600 million at present. And we do see other sort of large infrastructure projects, again, as institutions such as NASA look to shift towards more allowing the sort of private sector to come in and develop solutions for problems. With the International Space Station, for example, due to be retired in 2030, there's a contract with a private company to deorbit that. NASA is effectively looking to hand over the reins to the private sector to an extent. So there's several competing organisations who are looking to either attach sort of demonstration modules to the International Space Station before it's retired, so they can, I suppose, have an initial attempt at getting used to operations at that level. And then on the other side of things, you have organisations who are looking to build and construct their own space stations and launch them into space. And we're talking, several billions again at a time, that would effectively be at risk on a launch. And again, at present, it's not something that the space market could cover in its entirety. So that's just, I suppose, it's just one of the examples of sort of large infrastructure projects where it's not something that's typically been insured before, and as I say, attracts very high sums insured.
There's a lot to unpack in. That is absolutely phenomenal amount of, firstly, money that gets spent or needs to be covered in these situations. they're not a few £100s, like I mentioned, car insurance or home insurance, where you're paying small monthly premiums. These must be hefty, large millions of pounds of coverage required for such expensive equipment as well. And also looking at something else you said, historical data, that's something we don't tend to have a whole lot of in space insurance. And especially if I took the first example of a crewed space mission, there hasn't been one since 1972. There isn't really much historical data to base that off of. I suppose the flip side of that as well, though, is the more that people enter into the space arena, if you like, and there's more private companies entering, more data can then be built up over the next few years, and you can gain more historical data, if you like, from that.
Yeah, I mean, I suppose you could try and draw some parallels, obviously, with the International Space Station, which has been around for a few decades now. There's been a continuous human presence on that, so you could aim to draw some parallels between that. But sometimes it is tricky as a space underwriter when you brought something that's new and novel and complex, where there isn't an obvious existing parallel, to try and come up with an assessment as to where the level of risk lies.
Yeah, absolutely. And looking at potential claims, for example, in this area, again, I imagine they're few and far between, but where they do happen, they are very impactful and probably cost a serious amount of money for the insurer to have to provide coverage for. So what would a potential claim look like? And I suppose again, we're having new risks coming in, new, more private companies we've touched on a few times now. What potential maybe emerging claims in addition to current claims would you have, or would you have to provide?
Well, in terms of current claims, if there's a rocket failure, that tends to be fairly straightforward, and it's essentially a total loss of the satellite. And then down to sort of smaller issues or partial losses that affect satellites, or the underperformance of a launch vehicle. But in terms of new risks, I mean the space market itself is growing and expanding at present, where well, estimates vary, but you're kind of looking around the sort of 600 billion mark in terms of the global space industry. The next sort of decade or so, that's predicted to either double or treble, depending on how optimistic you want to be. And part of that is driven by new types of risks that are coming into the market. I suppose areas such as in-orbit servicing, where you're looking to once a satellite reaches the end of its design life, it has a finite amount of fuel that's on board. But essentially, if it gets to the end of that life and you've still got a working asset that's still capable of providing a good quality service for customers, then, and that cost obviously potentially had quite a high development cost as well, then you may not want to just kind of discard that as an asset and want it to continue. So then you can contract with firms who will look to dock with your satellite on orbit and provide fresh reserves of fuel. Possibly in the future, you might have some robotic arms that could do some level of repairs or servicing. That's a problem to be addressed, I think, by smarter people than me, certainly. And then in terms of other initiatives that are happening, there's also in-space manufacturing that's becoming more prevalent. I guess there's kind of a difference in approach between how you might want to go about that. As I say, you've got these commercial space stations, which again is another category in itself, which I'll probably touch on again in a minute. But essentially, the advantages of manufacturing some items in orbit and in zero gravity environment can be very appealing, because you get much higher quality or precision manufactured items that you could manufacture on Earth. So there's a growing interest and appetite in that area. And of course, then once the materials have been assembled in orbit, then you obviously want to return that back down to Earth. So again, that's a risky phase when you're re-entering the atmosphere. Lots to contend with in terms of the various heating effects. So that might be another area that develops. Historically, in the past, there has been some coverage for more scientific experiments that have gone on. Particularly, some with the Russian space program, who look to carry out sample returns. So that could be also a growing area that the space market would need to engage with and be involved with. I suppose returning to the space stations again, um, you have a variety of uses for those potentially. As well as the manufacturing and potential for scientific experiments to be carried out on board those space vehicles. You also have the space tourism aspect coming in again. I know some of the people who are looking to build some of these space stations are also having sections that are capable of being crewed by human astronauts. And also, I suppose as well as the sort of tourism aspect, would have more professional astronauts who would be looking to carry out activities in orbit as well. I suppose looking a bit more in a science fiction futuristic sense, you also have other infrastructure projects which have been talked about for quite a few years, but perhaps are coming a little closer to fruition now. Things such as big sort of solar farms or big solar power stations on orbit as a relatively clean source of energy that's fairly inexhaustible, or at least for the next few million years anyway. So yes, there's quite a range of activities that are going on, which the space market will need to kind of adapt to and look to provide new products and services to its clients.
Absolutely. And even discussing that with you now, I'm a bit mind blown about how much everything's changed in recent years as well. It's almost feel like technology is, as it does, catches up, speeds up. But even to this, they're having satellites or having things go up into space to refuel the satellite or to do with it there. It seems like it's out of reach, but somehow it's with technology advancing. You're right, one day it could be a seamless process of refueling a satellite. It could be we could have technology that is more advanced in that area. Do you think people overestimate or maybe underestimate how technical and how difficult underwriting in this particular sector is?
I suppose it's a difficult question to answer. I suppose from the perspective of, I suppose people maybe without the sort of knowledge of the sector might assume it's a bit of a scary prospect, launching things into space. And as I say, it's a risky business, but the sort of technology has become more and more reliable over time, particularly the launch vehicle side. Um, I think within the space market itself, there's quite a lot of expertise. So not just in aspects of engineering and technical aspects, but also within policy wordings and creating new products and services for customers. So, in a sense of people overrating or overestimating or underestimating, it's a little tricky to answer. I'd say it's quite obviously it's quite a niche sector, um, and I think once you're in there, you kind of either love it or hate it, perhaps. But I think it's an area that there's great opportunities to thrive and develop, and even if you don't necessarily have the technical background, there are opportunities to learn more and engage with the market and look to grow within the sector, I would say.
Oh, fantastic. And with there being, and we touched on this before, with there being less historical data in there, when you're looking to underwrite a particular policy, do you find that you're relying a lot on the technical expertise of, say, engineers and the actual people who are building these products rather than being able to look back historically and assess it based on that data?
It can be. I mean, space insurance has always been a little bit more dominated more by the engineering focus rather than say the actuarial approach you might find in other sectors, which, as you mentioned, is possibly down to the levels of data not quite being there for the population of satellites that have been launched into space. Versus an area such as aviation or car insurance, we've obviously got sort of big data to crunch through. I suppose myself, I'm quite fortunate to work with a team of engineers at Elseco, who've some of whom have built spacecraft with their bare hands as well, and have that expertise. So I'd say it is quite a critical component of what we do, certainly. And I think over the years, there's probably more of a shift towards bringing that engineering excellence to really understand the risk and kind of knowing knowing the product so that you can, ask the appropriate questions and try and pick out some of the flaws or the areas that might be a little hidden from the surface in terms of assessing some of the risk factors.
Absolutely. And I mean, we take a lot of our the public anyway take a lot of their interest in space and their knowledge of it from potential films and series. Interstellar pops into my mind amongst other series and films that are out there based in space. But it does always beg the question to me then, what would you say are some of the biggest myths or misconceptions that people have with space insurance that actually aren't true, or they underestimate certain areas when actually they have a big bearing on it?
I mean, first of all, probably a question I'm asked quite frequently is, oh, is it NASA or somebody who's insuring things? And as we've kind of talked about, it tends to be more commercial organisations that are more seeking space insurance products. I suppose sort of touching on some of the more you know um, commonplace of that's in the wider consciousness type issues. I suppose if you've seen the film Gravity, for example, it's obviously it's a Hollywood movie. It's geared to entertainment, suspense, danger, whatever. I think it's had its critics from the actual space community itself, but I think one area that perhaps it does call a bit of attention to is the sort of growing problem with space debris. And I think at present there's you know there's been theories developed that there could be some catastrophic chain reaction. It's known as the Kessler syndrome, which has sort of permeated the market for quite a few years. Although I say this is a bit of a worst case scenario, there's a general consensus within the space community that, as you correctly mentioned, Michael, you're launching almost exponentially more numbers of satellites into orbit, and all those activities are creating bits of junk and debris that are whizzing round in orbit at several kilometers per second. So yeah, there's not too much you can do about it if you've. I mean, some of the bigger pieces you can track. Sometimes satellites do have breakup events, or I mean, to this point we've had one notable in orbit collision between two satellites, which was in 2009. It was a US commercial satellite which hit by a Russian sort of government or military spacecraft. But to this point, we've had relatively few actual in orbit collisions, but increasing numbers of near misses. So it is going to be a growing concern. So the myth that's portrayed in popular media such as Gravity does kind of make the peril a little bit more kind of rapid or catastrophic than is currently the case. But it is certainly an area that is deserving of some attention, and certainly Elseco, we're looking to promote space sustainability efforts.
Absolutely. And yeah, long may it continue that there's no collisions from other satellites occurring in space. I suppose we mentioned space debris already as a risk that is, I suppose, more prevalent with the more satellites there are. There's a higher risk of those satellites colliding. What would you say now with other organizations that we touched on about SpaceX and Blue Origin and space tourism, as you mentioned as well, being more prevalent now, or there being a look to utilize space tourism a bit more and see it as a product to promote to the public, not just to governments or private companies? What would you say some of the emerging risks will come from that into the next sort of 5-10 years time?
So in terms of the space tourism aspects, I'd probably suggest, and it's not typically an area that's been strongly covered by the market, and in fact, I think it's one of the leading players. Blue Origin is kind of looking to pivot a little bit more towards other programs at present. But as I say, things such as commercial space stations come online. It could be a bit more of a tricky area to navigate. Again, I suspect those companies will probably look to deal with that through waivers rather than looking to engage with the space market for that liability cover as, I mean, you mentioned it's kind of offered to the public, so I guess in theory anyone can go out and buy a seat on a rocket that's going into orbit or suborbital. But currently at present, it's still out of the reach of most sort of common people. So again, I think it's probably likely to remain the preserve of high net worth individuals, or I suppose organisations that can fund private astronauts and sort of kind of bankroll that kind of expense.
Yeah, absolutely. And you're right. It does seem it's a stretch from the day-to-day public, and it is those who have the financial capacity to be able to afford that travel. And the other risks around, yeah, you used to just be you're insuring a product. Now you'd be insuring, I suppose, someone's life that they're going up there, or that you read waivers would have to be signed. There would be a whole lot more risk to an individual rather than just to products and services that could, in theory, be replaced, albeit at a high cost indeed. So just to sort of bring it to a close, I suppose, from your perspective, and you're obviously very passionate about what you do and enjoy your area, what do you find the most fulfilling thing about working in space insurance?
Well, I suppose, I mean, I probably consider myself a sort of self-confessed space geek. Perhaps a slightly different path in, I suppose a lot of people, watch Star Wars or Star Trek or something. For me, I think it was perhaps when I was younger, watching the BBC comedy series Red Dwarf and seeing, just kind of normal, everyday people kind of being in space and doing stupid things, and that's probably what sparked my initial interest. But yeah, I've always been passionate about space and improving our humanity's understanding of the universe and our place in it. And so I suppose I see space insurance as my way of kind of providing, building towards that future of humanity reaching out into the stars. Be that having bases on the moon, as we're seeing hopefully coming to fruition from Artemis. Elon Musk's grand projects of colonization of Mars. But I also see kind of what I do can potentially make a difference in terms of, I touched upon the area of sustainability, for example, and the problem with that, it's kind of seen as a bit of a tragedy of the commons, where most people, there's an international consensus that it's a problem and something should be done about it. But in terms of the actual practicalities of putting in regulation or legislation to kind of manage that, and the traffic control aspect, as you mentioned, isn't quite there yet. But I kind of recently read an article that kind of provide the perspective that insurers can actually also be a force for providing some of that, not quite regulation, but implementing some levels of controls on the space industry. For example, we tend to prefer more sustainable space operations that help to promote the longevity of Earth's orbit for current use and also for future generations. So we do, view operators and clients who have thought about, at the end of the life, they're looking to dispose of the satellite, either, burning it up in the atmosphere, or putting it into what's known as a graveyard orbit, so it doesn't sound out of harm's way and isn't causing problems for other space missions. So yeah, there's the space insurance. I've had experience through that. Obviously there's the more mundane activities that everybody dislikes, sitting in the office, filling in, returns or spreadsheets and things. But at the same time, some fantastic opportunities to travel and meet interesting people and clients all over the world. And, it can range from going to see a rocket engine being test fired in the desert in Texas, through to, going to the Far East to see satellites and rockets being built in factories and things. So it's really, really fantastic career, I would have said.
Absolutely. And yeah, with every job, you get the good and the bad, but the exposure that you get in such a unique area that is space as well, seems like it's unlike anything you'd get anywhere else. So I can imagine it being a really, really fulfilling career to be in space insurance,
Absolutely.
which is fantastic. And lastly, I suppose you've kind of summed up there why you like it so much, but would you recommend it to others inside and outside the profession, and why?
Yeah, I would wholeheartedly recommend it. It's probably a bit of a cliche, but the sky's not the limit when it comes to space. There's just so many interesting projects, initiatives to get involved with, and get some real insight to what's going on. I mean, just as a bit of a, I suppose, throwaway anecdote, my first day at Elseco, I suppose when you're typically doing your induction activities, and say you mentioned the more mundane activities that are important, but that are less enjoyable. I think in the afternoon we had an inquiry that related to an asteroid prospecting mission. So when get the opportunity to work with really, really cool and interesting, innovative projects such as this, it's you don't get exposed to that in other careers and areas, I would say. So if someone came to me and said, would you recommend getting involved in space insurance? I'd kind of say, yeah, take the plunge and just embrace the opportunities that come your way.
Fantastic. And what a great way to end. That's such a good summary of what seems like such a densely complex but also vastly interesting area. And it seems like it's forever growing, more people entering the market. Its technology's advancing as well. Who knows where we'll be in 10, 15 years with this, but it's an exciting time to be part of this sector. So Nick, thank you so much for joining me on the podcast today. It's been absolutely fantastic having you and your great insights as well.
Yeah, more than welcome. And it's been a interesting chance to sort of chat through some of these issues.
Yes, absolutely. And thank you for listening to this episode of the Journal Podcast. You can find useful links in the show notes and related articles on the Journal website, along with further podcasts. As always, please like, review, and subscribe. And until next time, goodbye.